Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. It's Monday. We got a short trading week, though. We got the Thanksgiving this week, right? Happy Thanksgiving to everybody. So what's going on today? Well, the Dow Jones is actually up a little. The Nasdaq's down about 100. This week, a lot of the traders, they go on vacation, so the volume is very low. Now, that doesn't mean we can't have a lot of price movement, but so far we had a 15% run up, off of the lows, but we're kind of moving in a sideways pattern. Now, I do think the next major leg will be lower, but they could possibly push it up a little bit here. The SPY sitting right below the 200-day, and they might push it up into that 200-day before we get the drop. Now, I do think we're going to go back and retest those lows, but right now I'm just looking for a top in the market. I think we've had a very good run up, and I think I'm looking for a top to where it comes back down and retests those lows. Now, we're coming into that strong part of the year between Thanksgiving and the end of the year is kind of a trending upward pattern, but I don't think it's going to play out that way this year. I think we're going to get a big drop in the market still this year. We'll see how that plays out. Let's move over to the real estate market. Now, real estate market's always fascinating to me, because there's so many different opinions that you can read. Now, we've been down nine straight months. 9 straight months has come down every month in sales volume. Now, everybody's going, Mike, that's just sales volume. Prices aren't coming down yet. And they would be correct. We're only down about 10%. But why does the sales volume keep dropping every month? Now, just since last month, the sales volume dropped another 6%, and that's a big drop. Now, let's just think about this. All right, so we got demand. Demand for houses is going down because of the high mortgage rates went from 3% to 7%. Now, what's inventory doing? Inventory's going up, right? And what's the mortgage rate done? It's skyrocketed higher. So we've kind of had prices kind of trying to hold up, but use common sense. What direction do you think prices are going? Now, I know a lot of you are thinking in my area, Mike, they're still going higher, and that's possible. But I'm telling you, prices are going to come down. Now, here's a general rule of thumb. This doesn't always hold true, but basically, when you get a 1% move in the mortgage rate, you get a 10% move in the house prices. So when mortgage rates were coming down for the last 12 years, the rates were dropping. The house prices were jumping and jumping and jumping. But now we went from a 3%, below 3%, to over 7%. I know we pulled back just under 7% right now, but let's call it 3% to 7%. How many percentage point increase is that? Well, that's 4 percentage points. So 4 percentage points would equate with a 40% drop in house price. Well, why hasn't it happened yet, Mike? Well, these things do take time to play out. They take time to play out. Now, I do believe we're going to get a 40% drop. Actually, I'm calling for 50%. Now, that's really not that big of a drop. We'll go back to the start of the pandemic. That'd be a 40% drop, but I think we're going to drop a little bit more than that. Now, if I really want to scare you, I think we're going to drop back to, the prices of 2012. I don't think the bubble ever broke, They never popped the bubble completely. It never got deflated. Look, in 2008, we had the great financial crisis, and the houses bottomed out in 2012, but they didn't really bottom out. All that really happened was that they printed the money. They printed money. In 2009, they started printing money with the sole purpose to prop up the housing market. So they never let the housing market come to a complete bottom yet. But this time, I think they will let the housing market come to a complete bottom now. Will they try to print more money? Absolutely, they'll try to print more money. But I want to talk about, mortgage-backed securities. Now, mortgage-backed securities, they bundle these securities together, right? And they sell them to Wall Street. They sell them to, the Federal Reserve buys them. Banks hold them. Okay, so mortgages that are, they're basically like a bond, right? As the price of the bond goes down, interest rate goes up. So when interest rate goes up, the price of the bond goes down. It's the same with these mortgage-backed securities. As interest rates go up, the price of the person holding the mortgage-backed security goes down. So who's the winners and losers in this game when mortgage rates went from 3% to 7%? Who won and who lost? Well, a lot of people would say the winners were the ones that got their house, the ones that bought their house. Well, maybe they're the winners, but what if the house drops 40 or 50%? Are they really the winners? That I'm not sure about, but I am sure about who the loser is. The loser is the holder of these mortgage-backed securities. Now, I think that banks are in a lot of trouble right now. Now, why do I think that? Well, because they hold a lot of mortgages. The mortgage-backed securities are being held by these banks, right? So these went down in value. Now, these aren't real losses because they haven't sold the mortgage-backed securities. They're still holding them. You get banks like Bank of America. They got $20 billion that they're going to take a loss of $20 billion, but it's not a real loss yet. It's just an unrealized loss because they're still holding these securities, but the value went down by $20 billion. You take a bank like Citigroup, they lost $40 billion, but once again, the loss is not a realized loss because they're still holding the mortgages. Okay, but these mortgages could go down a lot farther as interest rates start to go up. I think that these banks are going to need a bailout. Now, they reported record earnings because they didn't have to report these losses because they're not realized losses yet. But they're going to need another bailout. Now, who bails out the banks? Let's think about that. Well, that's always the taxpayer. That's always me and you. But here's another big problem, right? All right, who else owns these mortgage-backed securities? Matter of fact, who's the largest holder of mortgage-backed securities? Well, it would be the Federal Reserve. The Federal Reserve owns $3 trillion of these mortgage-backed securities. Now, granted, they haven't written these losses off because they still hold them, but they say they're going to start to sell these mortgage-backed securities. Now, as they sell these mortgage-backed securities, they're going to take a massive loss. Now, let's understand exactly how this happens. Okay, so the Federal Reserve buys $3 trillion of mortgage-backed securities when they're around 3% interest rates, but they bought $3 trillion of mortgage-backed securities so that mortgages would stay low. Now, where did they get the money to buy those from? Did they have $3 trillion sitting around to buy? No. What they do is they print the money. They print the money to buy the mortgage-backed securities, okay? So they print the money and they go out and they spend $3 trillion of money printed out of thin air. Now, what happens to when they print money out of thin air? Well, it makes your money that you have in savings, it makes it worth less and less and less. That's just how it works, right? That's how the process works. The more money you print out of thin air, the less money becomes worth. Okay, so they bought $3 trillion worth of bonds also, but $3 trillion just in mortgage-backed securities, okay? Their whole balance sheet's about $9 trillion, and that includes the bonds and the corporate debt that they buy also. All right, so they print the money, they buy this, right? All right, so now the Federal Reserve raises interest rates. Why do they raise the interest rates? Well, because all that money that they printed caused this thing called inflation. And now we got to fight inflation, so they're raising interest rates. But it's not really working. They have to do more. Okay, what are they going to do? They're going to start to sell these assets off of their balance sheet. They're going to start to sell the mortgage-backed securities to sell the bonds that they bought, right? Well, have they gone up in value or down in value? Remember, they were buying these when it was at 3%, and now we're at, the mortgages were at 3%, and now they're at 7%. So the mortgages have gone down in value that they hold, right? The price has gone down. So right now, the Federal Reserve, they got about a $1.8 trillion of an unrealized loss. Now, when they sell those things, it becomes a realized loss. Now, once again, who Who pays for their loss? Well, it would be us, the taxpayer, right? Me and you, taxpayers pay for the loss. Federal Reserve never takes a loss. They just don't. The taxpayer is the one that takes that loss. So they print the money, they cause the inflation to bring inflation down, they raise the rates, which makes all the assets that they purchase go down in value. They sell the assets, and then we have to pay for their loss. That's just how the system works. Well, it's not a very fair system. I'd like to get rid of the Fed, but that's just my opinion. Maybe you think the Federal Reserve is serving a great purpose. I do not, but I think they're in trouble, and the Federal Reserve is going to need a bailout, and that bailout, of course, will come from the taxpayer because they're going to lose about $2 trillion just on these assets that they're sitting there holding. But the banks are in real big trouble, and real estate's in real big trouble. See, the banks aren't really in that much trouble yet because it's an unrealized loss right now. It's not real. They haven't sold them. They're holding the mortgages. Now, what happens when this adjustment happens in the housing market? When the housing market gets devastated by this 40 or 50% drop? Well, all of a sudden, the people aren't going to be making their mortgage payments. Now, this is also going to happen with the recession that we're coming into. Millions and millions of people are going to lose their job, and they're not going to be able to make their mortgage payments. So those mortgages that they're holding now that already have billions, tens of billions, 20 billion for B of A, 40 billion for Citigroup. They already have that big a loss. What happens to those mortgages when people no longer make their payment on the mortgage? Well, they decrease more and more. Actually, they start to go down and down and down. And then they have what's called a really big problem. I think banks are in trouble. They're going to need a bailout. The Federal Reserve's in trouble. They're going to need a bailout. Who does the bailouts? Well, it's us, the taxpayer. That's who gets hurt. Now, the housing market, if you own a house, yes, you're probably going to get hurt by 40, 50%. We're only down about 10% right now. Now, 10% from the price that Billy Bob got out at, right? He got out at the top. We dropped about 10%, but we still have at least another 30 or 40% to go. Even the Federal Reserve says we're going to drop at least 20%. Now, this is going to devastate the housing market. They're agreeing that we're going to lose 20%. Believe me, it's going to be at least double that, which is 40%. And that's going to be devastating to the housing market. That's the bad news, right? The good news is that there's going to be some bargains out there, right? Save your money. This is going to take, well, it's going to take 18 months to play out. It might even take a little bit longer before we hit the exact bottom. Now, here's the thing. When we hit that bottom, we're not going to bounce off the bottom like we did during the Great Financial Crisis. When we did the Great Financial Crisis, here was the house market, came down, hit the bottom, but it went right back up. Why did it go right back up? Well, they printed trillions and trillions of dollars. Now, aren't they going to do that again this time, Mike? Well, yes, they're going to try to do that. It's going to come down. They're going to print trillions and trillions of dollars, but now it's going to be like pushing on a string, because when they had to print, 3, 6, 10 trillion last time, they're going to have to print 10, 20, 30 trillion this time. And it's not going to rally. It's not going to rally. What it's going to do, it's going to destroy the dollar more and more. So your money is going to become worth zero. And that's frightening to a lot of people. But if you prepare for this and you're ready for it, it's better to know that it's coming, right, than to not. Now, a lot of people say I'm a gloom and doom channel, and I get that. I mean, right now, I don't see a lot of positive stuff in this housing market. I don't see a lot of positive stuff when you continue to print money out of thin air. I think it's going to hurt the stock market. I think it's going to hurt the housing market, and even the bond market's going to get hurt by this. Everything's going to be coming down. I know it's Thanksgiving week. I didn't want to depress anybody. I just want to alert you to what's going on in the real world. Now, if this bothers you, this may not be the right channel for you. If it is the right channel for you, go ahead, give me the thumbs up. Why not? I'm Tall Mike. Get out there, everybody. Have a great Monday. I hope to talk to you in the week still before Thanksgiving. If not, have a great Thanksgiving. Bye-bye now.